Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets. It is 7:38 in the morning on November 28th, 2024. For those of you in the U.S., I bid you a very happy, healthy, and fruitful Thanksgiving. Enjoy your family today. The holiday is obviously going to probably cause a slow day in New York once I don't know if London celebrates it. I don't think that they do. I think it's just an American holiday. At least I would think that, considering it's supposed to be for the pilgrims and the Native American Indians that basically got together and had a big feast before the winter. I mean, like, that's the story anyway of it. But it's going to probably be kind of slow today. But markets will move, and there will be points of interest. But for all intents and purposes, probably going to just take the day off today. And I'm looking for topics to do an educational video. I don't know if you guys can put in the comments like what you think I should talk about, like what technical indicator or tool or any type of technique that you'd be interested in, because I have a library full of ideas and a library full of old books on technical analysis, stuff that is good. Some stuff is really good, some stuff is just useless. It's just written probably just to make money, but if you have any ideas of what you'd like me to cover, please let me know. Okay, let's start off our analysis with dollar yen. Let's go back to what we used to do. Dollar yen. Okay, so in dollar yen right now, we basically hit a resistance level that we talked about yesterday at 151.85, if you remember correctly. Said if we can get back up, we had also a level at 150.27. Didn't quite make that. Went to 150.45. So dollar yen is officially moved into a bearish kind of mode. Now, it hasn't completely switched to bearish. Now, where am I getting this from? Let's go to the weekly analysis, okay? Here we go. This is the week. All right. So this is this week happening right now. When this week opened, remember we talked about 3-bar harmony, right? We said that if a market price broke the highest high or the lowest low of the previous 3 bars, the market basically has shifted from, if it was downward, it's upward. If it was upward, it's downward. So looking at these 3 bars, not including the week that opened, this is the lowest low that we had. Right there, and the marketplace did break it. Now, in order for it to show true bearishness by tomorrow at 5 o'clock p.m. Eastern Standard Time, it needs to close below that low. And then you could say, okay, the market has turned bearish. Right now, it is neutral to bearish tone, okay, because it did break it. But it doesn't mean that it can't recover. Now, here's the thing. The marketplace could actually recover. It could recover all the way up to that top and then fall. Now, it's not going to do that in 2 days. Or, I always say these things, and then I think to myself, I should never really say anything like that, because foreign exchange, you can get volatility that's insanity. I mean, if a nuclear warhead's launched, okay, it could go either way. People could want to bring, yen home, or they could want to buy dollars. You know what? This type of war doesn't really make a difference, because it's total assured destruction for everybody. So it really makes no difference. But I guess you would need your money. So maybe I would are on the side of that people would want to bring their yen home because they're the furthest away from all this nonsense. And maybe sell dollars. I really don't, it's a hypothetical that you really can't answer, right? I mean, used to be that if there was a war or turmoil, people would run to the U.S. dollar. It's the United States, like the last, 4 years, has proven itself to be really nothing but just, teetering on a third world. You can't even say third world country, because I was like, oh, we used to put ourselves above other countries, but in reality, the government's so corrupt. It's the same. It's the same. I mean, it's just a small handful of people that are trying to just rip everybody off, and they've been doing it, and they've been getting away with it. And hopefully, it's over. Hopefully, it will be restored to the people, and that we can only hope for. This way there's liberty and freedom throughout the world, and the United States can become that shiny city on a hill, so to speak, as Ronald Reagan once said. But okay, I digress. So anyway, just getting into the 3-bar harmony, that was like we were looking at 3, 4, 5, right? So we broke that level. That was basically showing bearishness. That's where I'm coming up with it. Okay, so you could do that, and that'll be a really good homework assignment for you. Go back on a weekly charts and look. Say, okay, I'm starting from this week. This week didn't exist. It's opening. What was the highest high of the 3 bars? What was the lowest low of 3 bars? And then say, okay, it broke that. It closed below that. What happened? Nothing's perfect. It's an indicator. It's an idea to get a leg up on what the market wants to do, but what the market is doing compared to what the technical analysis said it's supposed to do is an important piece of information. Because if you can't say my technical analysis says market up and it's going down. You got to trade what you see. You got to trade what you see, not what you think you want to see. That's the key to this whole thing. Trade what you see. Don't trade what you think you should be seeing. You can't pursue something that's not happening. Now, you could have an overall view down. So what I'm going to do is I'm strategically going to use Fibonacci. I'm going to use measured move type of things. I'm going to use a pivot point analysis in order to make sales with low risk stops. That's fine. That's because you're coming up with a game plan and you're projecting in the future where the market you think should exhaust itself if it's truly in a downward movement. All right, so let's get on for today. Enough with that bloviating on and on and on. All right, so we definitely have resistance. That resistance is still good at 152.23. We made a new high here. Where was it? 151.95-ish or something like that. Yeah. I would have to think, we have to stay above. I'm giving a little bit of a wide point today, 151.22. That level is still good. We need to stay above this in order to basically stay within the range of the day. And the only reason I'm saying range of the day is because I don't think that the marketplace is going to be, unless something happens, of course, even though it's Thanksgiving, anything can happen. I don't think it's going to do much today in New York. We still got a few hours left to London, but I think that they're probably heading towards the pub pretty soon. It's like, 1, 2 o'clock in the afternoon there? They're probably at the pub right now, getting their fish and chips and, what is it? Scotch eggs, man. Did you ever have a Scotch egg? Scotch egg is basically what I would consider very something similar to a greasy cannonball. It's a hard-boiled egg that is, I think it's rolled in bacon, rolled in like lard and then breaded and deep fried. Closest thing to like what I would call a greasy cannonball that you ever could have. When they're done right, they're really good. When they're done like pub style, like, you know, you got Harry in the back just like throwing stuff in a fryer where the oil's like 17 years old. No, you want to stay away from those Scotch eggs. All right. So, and I don't mean to make fun of Harry in the pub, but, you know, just stay away from that stuff anyway. It's not good for you. But all right. So that's the level we got to stay above. 151.23 today. In order to stay within the range. Now, if we could get above 152, 151.95, close above it, and somehow crawl above 153.23, where the queen confirms 152.23, not 153.23. Sorry. We got resistance at 152. 152. I'm going to go right here. 152. Damn this thing. 70. 152.70. Don't really see that happening today. Like I said, I keep saying I think we're going to trade within a range. Unless something crazy happens, then all bets are off. Okay, so let's go over to good old sterling dollar. Whoa, sterling dollar is finally broken up a little bit. It's showing a little bit of strength. That's great. It's got to stay above 126, say 40. Let's move this down. Give it a little room. Let's go right down to here. It's got to stay above 126.40 in order for it to continue to try to get to 127.25-ish. Now, if it breaks 126.40, you can expect it to trade back down to, I would think, 125.90, 125.80. Fine. And we do have support, you know, which your old resistance level was 126.73. Look what happened once the level broke. I mean, it came up, traded back down, couldn't break the new low that was established. So here we go with, now this is a 1 hour chart. Okay, so you got to take that for what it is. It's a 1 hour chart. Yeah, it did open up market structure pattern. Okay, so we had a low. We had first, let me go here. We had this high, right? We had this low. We had a lower high. We had a deeper low. This would have been the low that needed to break on the 1 hour to show really going down to that 120 level that I've been talking about. Okay, sterling has recovered. That's good for what's going on in Europe. In other words, maybe there's something going on behind the scenes where they're gonna slow this whole talk of nuclear destruction to a halt. That would be wonderful, you know. All right, so we had this low. This was the low that had to be broken in order. So we have, look, we got a high, we got a low, we got a higher high. Okay, well, that's showing some life. We got a low, we got a lower high. Warning, deeper low. Ding, ding, ding. That's the one. That's the one that has to break for market structure to say, going definitely down, bearish, right? Now, all of a sudden, we get a higher high, slightly, or you could say this is a double top. Marketplace reversed. It came down. It made a higher low. Boom, broke up over the sell. Actually, this was a sell point I had from this, saying that it was going down to potentially the low bars close. It didn't make it. Okay, it did not make it. Then look what happens. Like we just ride this support level or the trigger level, and then a three little Indian situation occurs again. Remember I talked about that in another video. And then the marketplace, boom, breaks up through the resistance, and now it's tracking to 127, like 25, 127.30. Like I said, I don't think it's really going to do much today. It'll be more tomorrow, Friday's analysis that would give us a better clue. All right, euro dollar, same thing. Euro dollar really hasn't done what sterling dollar has done. Euro dollar is basically has not been able to get above the 106.18. Right now, as it stands, it's got a hold above. I'm gonna give a minor support today at 105.22. It's got a hold above 105.22 in order to basically stay in this flag pattern that's occurring right now. You could actually draw a resistance line here, and you got your support line. I mean, I'll do that. What the heck? I'll do that for you. Trend line. We got this demand point right here, going over that demand point right there. We got this supply point here. Going down, that there was a supply point right there. There's a come on, man. Supply point right here. Now look, marketplace kind of just pierced this level, and now is trading back down into the triangle. If it breaks this, goes down lower, you could expect a drift probably to 105. The figure, 104. Yeah, 75 is fine. Now, if it can. It's probably going to stay in this pattern, this big rectangle. Now, it's in a flag right now. But it's probably going to stay in here for the day, I would think. All right, let's move over to sterling yen. I had called this one really well yesterday. And actually, we nailed the bottom the day before. Let's see what's been the high so far. 50-ish. Yeah, it's got a hold above 192, the figure. It's got a hold above this support line today. And if it doesn't, it's probably drifting back down, potentially to, you have this low hours close, which is not really far. It's only 10 pips. But if I go down to this area where the marketplace kind of showed strength, this bar's closed. It's not the low bar because it's probably right there, 191.45. It's got to get above 192.76. Don't really see it. Again, this is Thanksgiving. I don't really see it really happening. I think it's going to be kind of a quiet market. It could drift lower. I mean, it's still in a bearish tone. Same thing with euro yen. It's still bearish. But, today is Thanksgiving, and I keep saying it. Sound like an asshole, but I don't expect much today. All right, euro yen. Same type of stuff. I was going to say shit, but I'm trying not to curse. It's really close to, a pivot point. The 106.0, really, it's right here. It's right at this point. So if it breaks below this, okay, we could trade back down to 159.55. If we can get above this high, close above it, we got resistance really close at 160.70, and then 161.50. But again, it's a quiet day, so don't expect much. Whatever you do, don't trade too large, because it's the type of day where you could get chopped up because it's not doing anything and you think it's going to do something. So you go and you trade large because you're like, I want to make money. And next thing you know, you're taking like 20-point loss, and then it's going back down to where it came from or up to where it came from. And you're doing the same trade again, trying to catch what you thought was going to happen, and it doesn't materialize. So it's really a day to just like kind of stay on the sidelines. If you're in the States, enjoy your family. tomorrow the marketplace is always there. There's always oceans of opportunity in any type of trading. There's always oceans of opportunity. So happy Thanksgiving, everyone. Please, if you like what you see, share my videos far and wide. Subscribe. Smash the like button. Don't forget to ring the bell. Head over to Park Avenue Trading. Get yourself a free ebook. You're going to enjoy it. And remember, always enjoy the party, but dance near the door. Cheers.